what excites us most would be the growth in Nigeria. So, okay, slightly off the high point, right, in oil and non-oil. But this is 6.5% plus. Still puts Nigeria above all the BRICS, other than China, of course. Yeah? So what excites us is the growth potential and the fact that we're 6.5 plus, and with some of the reforms or the catalysts, then Nigeria could do 9, 10, and basically that's what excites us the most. What worries us the most is that there still are not the external buffers to protect the currency should there be a sustained fall in the oil price. So
I was just going to get to that and get your thoughts on that point. How prepared is Nigeria for another major oil price shock, if that were to happen? I mean, clearly, the global growth story going into next year is not great. So we could see that oil price fall off a little bit, especially if we see some calm in the Middle East.
Yeah. Well, the answer is that defences are not great, and Nigeria is not very prepared, and this will be the official line. If you ask that question of the central bank in their more open moments, they'll tell you exactly the same thing. So what happens in the worst case scenario? Well, you go back to fourth quarter 2008. So you construct a whole series of administrative measures to try and hold the line on the currency, and eventually you have to give way. Or you're rescued because the oil price comes back up at convenient timing for you.
Right, good point. Okay, now let's talk about Catalyst for Growth. That's the theme of this conference, Catalyst for Growth, a pragmatic approach. Your thoughts on the major catalysts that the authorities in Nigeria need to focus on going into next year?
Yeah, I'll just say very briefly why we chose the theme, Catalyst for Growth. Basically, we're following up on our first conference last year, and last year the theme was From BRICS to Brinks. And FBN Capital is very proud of its construction of putting the N in BRIC to make BRIC. But it's a minor point, of course. Next year, so we maintain the theme this year, but we're looking more sectorally and less than policymakers. So what are the main catalysts? Well, the main catalysts are the implementation of the reform program. And what would be the number one? Number one, I think, probably has to be power. I mean, because it affects every branch of economic activity is affected by the absence of power. Either you don't have it, right, or you have to pay far too much for it. And if you pay, the reason currently you pay far too much for it, that actually of explanation. That is why when they hiked the electricity tariff, there's virtually no protest, because either people didn't have it or they're being ripped off for it. In other words, they had to use generators. So there's no protest. So I think power has to come first.
Right. And your growth expectations going into next year, all things considered, I guess it's always difficult to call the oil price. What are your thoughts on what Nigeria is likely to, how Nigeria is likely to perform going into next year?
Into next year, yeah. I mean, for this year, we've had to scale down to 6.6 for this year, and these are broad brush forecasts. But next year we see a bit of a pickup, and we got 7.3. So why have we gone up next year? Well, we've gone up because we see the reform program continuing, right, at its pace, which is not ideal, but continuing nonetheless. And we see the benefits of the reform program coming through.
And that reform program, I guess you're referring to the power sector review, and of course the petroleum, the downstream oil sector inquiry, if you like, into the
yes, I mean, it's well funny, but not funny, humorous. That the plan was to ditch the subsidy, right? The federal government had to row back under pressure, and so we had partial reduction in subsidy, i.e. increase in price. So actually what's resulted from that, there's a frenetic sort of audit going on of all sorts of individuals and institutions, organizations in the industry, which has been very helpful for various reasons. One, it's brought the import level down. It's reduced some froth, if you like, in the foreign exchange market and helped to underpin the naira. And the other reason is that because the prices, the level for the new retail price, the PMS, actually is very close to the level in neighbouring countries. So, well, we can calculate that this has taken away some of the demand for imports that are not consumed domestically.